Today, folks, crypto billionaires ending up dead, people thinking the market's going to absolutely collapse, a lot of fear in the real estate market, but what's the actual reality we're facing as we review my $430,000 dividend stock portfolio with obviously stocks that I'm interested in buying, my thoughts kind of moving forward here, and some little bit of life circumstance updates. If that's a conversation you'd appreciate, in return, I always ask that you hit that like button, folks, but I'm always just kind of reminded of the insanity of people just not buying these dips. That's why I keep on this channel, guys, hammering to you that when the market drops, you see me buying. Hopefully you see a lot of other YouTubers buying, because let's just take a look at these mega cap companies, these AAA rated companies that, Michael Burry and all these people were like, sell, sell, sell. And look at where we're at year to date. I mean, Apple is up 31%. I obviously don't know if this is going to continue. It seems a little bit extreme for me personally, just because of the multiples these companies are holding. But again, from a cost average investing standpoint, you get exposure through the broad-based ETFs, right? But to not be buying those dips, I mean, look at what this has turned into. Microsoft up 21%, Amazon's up 18%, Meta probably being one of the best performers, got way too oversold and is almost back to the price that I sold out of it at. I mean, I think it was an odd year ago, somewhere I think around here at the 210 to 220 price where I exited. So we're pretty much back to where it was. Like if I just held, I'd be back to par here, and if I was smart, I would have put all my money in at $90 a share and watched this puppy skyrocket. But look at Tesla, man, up 71%. A lot of volatility to be holding these individually right now. But again, is this a bear market rally? Are we starting to see the signs of the end of this recessionary environment? I don't know. We're going to talk more in depthly about parts of the market I think are going to get slaughtered maybe soon, but we got 21% coming out of Google. Nvidia's up 88%. The S&P 500's VOO, one of my biggest holdings, is up 7% because obviously all these tech stocks are rallying so nicely. The Canadian market's not doing as advantageously just because the financial sector is getting hit so hard, but again, I think that's a huge buying opportunity. I'm kind of getting tempted to buy the bank stocks individually and maybe start loading up because the yields are just insane. And I feel like if you can tap in those super high yields, you can start tapping in that growth on top of it. I mean, the rate of return, I think, in the next 1 to 5 years is going to be insane on these really foundational companies. I wish I could say the same for these big tech companies. I think we're going to have to be a little bit more patient to see where they end up because they always trade at a premium. Honestly, I'm one of those like cynical millennials. I want to see a big correction. I'm willing to see my portfolio get hit just so I can have those potential buying opportunities for the next 10, 20 years of my life. But you can never get exactly what you want on the Chinese side of the border here with Tencent. Like even the Chinese, your Alibabas, these things have rallied pretty intensely off their lows. I mean, up 100% since the October lows, just like we saw with VOO, which was one of the most intensive buying periods currently that I've taken. If you go back to my October videos, you'll see me investing a lot of money down in that period of time. Worked out very advantageously. If you're a Bitcoin or crypto lover, you're seeing the same thing. I mean, Bitcoin's up 69%. I think it was real funny there. If you missed April Fools, because even Elon missed April Fools and he thought posting this a day later when he changed the Twitter logo to a Dogecoin, people were like, what? What is this going to be permanent? Why did you change it? It's not April Fools anymore, and it only lasted for barely a week. But Dogecoin jumped tremendously. I mean, it was up like 28-30% over the month, and only to lose like 12% of that. It's kind of pulling back. Pretty interesting trade. I wonder if Elon was pumping this to get out of it to raise liquidity, because Twitter's basically going broke and apparently they have no more cash, and maybe this was his excuse to raise cash at pumping Dogecoin. I mean, it would be a real twist of fate to reality if that's what he was actually doing. But getting right into this, folks, my portfolio is back to being about null between all my accounts, TFSA, RRSP, corporate account. We'll take a look at some of the individual accounts in a moment here, but we're back to hovering just around flat, right under the $400,000 mark. We're in the midst of tax season. I'm owing a little bit more than I anticipated, so that's going to eat into some of my cash capabilities here. But at the same time, business is good, still bringing a lot of income, a lot of good things from the cash income side of it. In fact, I should be investing, but I've been primarily going back into the cash stacking phase. We can talk about that in a moment here, but right now everything has been in a fairly good position. I mean, with VOO up, most of the market's rallying at the beginning of this year. I'm pretty happy with where I'm at, and considering dividends are going to be coming in like wildfire still month over month, I love these monthly paying ETFs like VDY. It's just like, because there's no stall out period for me not to be collecting cash, right? So my dividends apparently going to be getting around $12,468 annually. It's continuing to trickle up. Like I said, as taxes kind of finalize up, I'm going to have about $900 in contribution room to my RRSP. It should be a lot more, but I way over contributed to it last year, and I'm surprised I'm not getting penalized for it. My accountant said, look, like, because typically they charge you like 1% every month for whatever you over contribute. My accountant said, look, if they don't come knocking on your door, don't go knocking on theirs and tell them what you were doing, because they basically rolled it over to this year, and apparently it's not as big of a deal as over contributing to your TFSA, but who knows? Time will tell how much crap I get in. Anyways, we'll take a look at the individual accounts, but before we do, if you want to support the channel, guys, you want to track your portfolio the same way I do here, go to portfoliospreadsheet.com. A link is down in the description below. You buy one, you get one for each platform for free, and I do have personal finance spreadsheets that are sold separately. Buy one of those, get one for each platform as well. If you want to track your FIRE journey, your financial independence to one day perhaps retire early like I am, I'd appreciate it. It supports the channel, so on and so forth. But let's get into the individual accounts to see where we're at, because, man, from where we were at that big dip from like a week ago, we're definitely recovering, right? I mean, my TFSA here is in the green, worth about $166,000. And again, I haven't invested any of the dividends yet, sitting on a pretty nice amount of $835. Going to be getting another big dividend check this month, as mentioned, from VDY. Love that ETF. So this is just going to keep trekking in cash. Again, I'm not as aggressive at this point to want to just throw it into the market here, so I'm just watching the positions, but all in all, like you could see, VOOs kind of returned flat into this one. SCHD, they just rebalanced their entire holdings. The Schwab US Dividend Equity ETF, they added Pepsi. They repositioned a lot of the top 10 holdings, which I'm very pleased with the current ones. So this is probably what I'm going to put some dividends into. I'm just being patient here. I'm not in a rush because the markets are just kind of up a lot right now, but take a look at this, because here's the actual income I'll be receiving off my TFSA, about $215. It's projected out, not going to be exactly accurate, but we can see that we're going to be getting a check on April 10th, which I'm very much looking forward to. And obviously we got all our quarterly payments, but we are expecting one more payment from Taiwan Semiconductor, which will be my first TSM check, which I'm very much looking forward to. Love my Taiwan Semiconductors as I patiently sit to see what that stock's going to be doing for the rest of the year. And just getting into the managed account here, it's worth around $39,000. This is a fully taxable brokerage account, and I was really smart last year because I held a lot of REITs and stuff in here. Collecting those real estate investment trust dividends are counted as regular income, whereas most of my dividend ETFs like VDY here, that's counted as discounted dividend income, because most of these are Canadian companies that make over 50% of the revenue in Canada. You want to collect, if you're holding companies in a regular brokerage account, typically you want growth companies, because then you're not getting taxed on the dividends. Growth you can project out, you're not worried about paying the tax man. But what I've kind of done is, I got rid of the REITs. I took some tax loss harvesting, so I did avoid paying any taxes in this account. In fact, I'm getting a really healthy tax refund of like over $1,500, which is super awesome. But what I'm looking to do is probably just keep buying some monthly ETFs in the regular brokerage account, because I do like having access to cash flow and especially discounted dividend income. So I am going to be looking at perhaps adding XEI, because I've got way too much VDY, and we've talked about XEI in the past for quite a little bit. It seems to be a pretty intriguing, high-yielding Canadian ETF that will diversify my holdings a little bit better. Taking a look here at my RRSP, as mentioned, I'm still waiting. I don't want to rush into it. I should be able to, again, put in that $900 that I mentioned. I'm just waiting to see it show up on my CRA website, because I'm so good at over-contributing to this account. I don't want to rush into it again. But I got about $660 that I received from last month's dividend income for SCHD. So with another 900 CAD converted to US, will be probably closer to about 600. So it'll give me about $1,200 or so to put back into SCHD. As mentioned, I do want to try and get about 100,000 in this position, because currently I have about 86,000. Not in a rush to fill that out, because I'm probably going to use some capital gains that I inevitably take off TSM to continue to build up my dividend income at some point in the future. There's no rush on that, but for now I'm more or less just going to take it real slowly, real easy with my investing side of things, because I'm probably going to do about a 50-50 split between stacking cash and just slowly trickling some cash into the markets, because again, things are pretty up here. I don't see any crazy discounts outside of individual things like the banks, so I'm not sure what I want to do here just yet. If I want to focus on the ETF side of things, if I want to start buying back some bank stocks. There's a lot of small cap companies that I'm working with on this channel that I really love, that I'm probably going to start cost averaging into, because I kind of get the best of both worlds. I get to work with the company and I can become a shareholder in them as well, which you see me talk about a lot of those companies like Aduro Clean Tech and that stuff on this channel that I hold in my corporate account. I'm not going to show my corporate holdings. I'm trying to keep those a little bit more private. I might show those more or less for the Patreon members at some point. But when it comes to just the individual stock sector here, I just think banks right now are trading at the best discounted value. They're paying the highest premium. They're very hated. I keep saying that if you buy these things, come back to me in 3 to 5 years, probably not going to regret this. And because they're paying out such high yields here, it just, I don't know. I'm kind of on the edge if I just want to start dipping my toes in. But what's the big fear with these banks? What could potentially happen? Because clearly the markets are starting to come back, right? Markets are finding their place of solitude here, rallying a lot of the tech companies, S&P 500 coming way off those October lows. So what it is with the bank stocks? Why are people so scared? Interest rates, right? What do interest rates affect the most? As we found out, TD is the most shorted bank globally right now, and that's because of their fear of the Canadian housing market and the US housing market. That's what everyone's talking about right now. Like in a high interest rate environment, when we're in Canada here specifically, look at the cost of some of these places. I'm starting to see discounts and some better valuations in condos, which I've talked about potentially being a buying opportunity. But when the average house in Ontario, especially in these higher premium areas, we're looking at condos here, but the average house is like $1 million plus. You got to think if you're buying like a $1.2, $1.5 million home, 20% down, you're gonna have about $1 million mortgage at the interest rate of around 5 to 6%. I mean, oh my God, that sends chills down my spine. I mean, you're talking about 50, 60 plus thousand just in interest payments alone. So people are very fearful that the luxury real estate market, which is already correcting pretty dramatically, but if it trickles into the rest of the real estate market, people start defaulting on those loans. We're seeing obviously bank loans become less rated, like the ratings are dropping because people are having to cut into more of their cash flow to make up for the payments. A lot of people's renewals on mortgages are coming out. This is scaring the crap out of a lot of people, and it's hitting a lot of parts of the REIT market as well. I mean, you look at things like the office REIT market, which I'm also thinking is starting to trade at a favorable discount. There's a lot of stories talked about this pretty residually this week, with Allied Properties. This, if you look into the balance sheet on this company, it is astounding. It is trading at ridiculous discounts, but that's because people think that office REITs are getting hammered. There's a huge, vacancy rating in offices in Toronto. I think it's like 15%, the highest that it's been in like 20 years, even starting to overpeak what we saw in the pandemic. And people are getting really fearful of offices, which I find intriguing because those places could be repurposed for rental units. Like there's a lot of opportunity in downtown Toronto to utilize office space for many other things. So I find it intriguing that, even though this company has good cash flow, great tenants like Google, like governments, that, people have really given up on it. I mean, it's down 50% in the last year. You take a look at this and we're starting to return back to what would have been like 2008 level like crashes in this REIT, trading for $3 billion. The company's got like I think 9 or 10 billion, probably in underlying asset values, paying a dividend yield it can still afford. I don't know, but obviously the interest rate on this sucker is very low. When I looked into their average weighted interest rate, it was like 1.8%. So obviously they're going to be losing some of that cash flow as mortgages come up for renewal. But I don't know. I'm looking at this. I'm looking at a ton of things, seeing a lot of crazy opportunities. Now, outside of that, just to finish up with a fun story here, I don't know if it's a fun story, but it's a disturbing story nonetheless. There has been a suite of unfortunate unaliving of people across the globe that have been related to the crypto sector. Recently, we saw the tech executive Bob Lee, the founder of Cash App, who recently was stabbed in San Francisco and passed away. And this is just one of many stories. I mean, since December, there was people that, these crypto billionaires on vacation, they were tweeting that they were worried about their lives, showed up, unfortunately floating unalived in the ocean. I think there's just something crazy going on with a lot of people. Even here in Canada, there were, crypto kids, really young guys that were picked up by mobsters, threatened, because, when the bubble burst, clearly a lot of unfavorable, scary people lost a lot of money, and I think they're starting to just get fed up with it, and we're starting to see the results of that. I don't know. I'm not sure, but this Cash App dude was involved with a lot of crypto stuff as well. Very weird market we're in here, guys. I'm hoping you're doing well, though. You're not making crazy decisions and taking money from crazy cartel people and investing it in crypto for them. So just be diligent, be careful, continue to cost average, and I'd love to know how your investing journey is going in that comment section below.